Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guests are Anthony Scandariato and Brian Leonard. Thanks for being on the show, Anthony and Brian.
Thanks for having us, Whitney.
Thanks for having us, Whitney. Appreciate it.
Yeah, and they are the co-founders and managing principals of Red Knight Properties, a boutique multifamily and mixed-use real estate investment company with a track record of building portfolios that deliver dependable cash flow and equity upside. They have 65 apartment and rental units under management or ownership in northern New Jersey and under contract for an additional 74, totaling 139 units acquired in less than a year. Also, they own and manage in Orange County, New York. Prior to forming Red Knight Properties, Anthony worked as an acquisitions and asset manager vice president for Vision Properties, where he was directly involved in sourcing, negotiation, and managing the acquisitions of $600 million of Class A office assets. And after an impressive college football career, Brian was drafted by the St. Louis Rams in the second round and went on to play 8 years as running back in the NFL. And now he's in real estate, and we're going to hear a little about that as well, I think. But guys, thank you again for being on the show. Give us just a little background of what you all are focused on right now, and just a couple minutes of maybe how you got into this syndication business.
Yeah, I guess I can start. I grew up in a small town upstate New York, and I was a pretty good football player. So I am getting a scholarship to Rutgers University, and I had a good career there. Played there 5 years, redshirted, and then ended up getting drafted in the second round of the St. Louis Rams. And had a pretty good NFL career. Ended up playing 8 years. The average of the NFL career is about 2.5. So I outlasted most of them and did pretty well. But after my career, my football career, I had to make that transition into regular life, a real job, and that's never easy for an NFL football player. Basically we grow up playing sports, and we don't really have job experience. And, it's a struggle for a lot of players to make that transition to the next step of life. And I always knew that I was super interested in real estate. I bought a house out in St. Louis, and I rented that out, and I was making some cash flow on that. So it kind of excited me. And then after I was done playing, I always wanted to take a couple years off too. So I took 2 years off. My son was born, spent 1.5 years with him. And then as a stay-at-home dad, I'm like, okay, this is great building the bond with my son, but I gotta get a real job. I gotta get out and set more goals and aspire to be something more than a stay-at-home dad. So I started reading a bunch of real estate books, and it was basically the books focused on multifamily properties. And one of my old teammates, Dave Maluski, worked at this company called Vision Properties, and he's like, come on in, meet my boss. It'd be a good experience for you. Maybe you can come in, do an internship or just kind of, learn the real estate business. And when I went in there, I talked to his boss, and it was great meeting him, but I met another guy on the side. I met Anthony, and Anthony started talking to me, and he was in multifamily properties on the side of his company, so he's doing small properties, 2, 3, 4 units. And that's exactly what I was reading about, and that's what I was interested in. So maybe like Anthony, next deal we can work on together. And that was a little over a year ago today. And the first deal we did was an amazing deal. We'll probably talk about that later, but it was in Chester, New Jersey. And we just refinanced that after we added value. And it was a heck of a deal. And ever since then, we've been growing. And now we're almost at 139 units. And, it's been a whirlwind. I've learned a lot over the last year because basically having no experience in real estate, I think people have a lot of trust and belief in me from my NFL career, my college career, and I built a good reputation. So it's been a long, great process, but I'm excited to keep growing with Anthony.
Awesome. What about you, Anthony? Give us just as brief as you can, and let's get into it.
Great. No, that was excellent. And to allude what you were saying in the beginning, Whitney, so we actually have not 139, but it'll be 180 by February of 2020, assuming that everything goes well with a closing that we're working on. So so that's pretty much how Brian and I got started. about a year ago. And as Brian said, I was in the business already, working for a corporation that specialized in office buildings. At the time I was there, and Brian said this on the side, I was working on 2 to 4 units. Was some buy and hold, some buy and flips, and the returns that I was achieving were pretty high. And so we just hit it off from there, and we acquired our first property. But what we're focusing on now more of, and the way we bought our first property, the building in Chester that Brian mentioned, was just through a general partnership. So for your listeners, most of the times people think of when they want to partner with someone, it's more on the syndication side. It doesn't always have to be. It could just be with one or two other people, and it's just a simple LLC format, with different rights and responsibilities for each of the managers. So that's kind of how we started it. And then, we've gravitated towards a syndication area, which Whitney has a lot of experience in. I'm sure, your listeners do as well. And we're trying to focus on more of that because for us, you're going to run out of money at some point, and you're going to want to partner with other people who are interested and might not have the expertise, time, knowledge to be able to sign on the loan. Different requirements you need to buy larger properties where you could foresee appreciation, because as Brian said before a little bit, if you stick with the 2 to 4 families, there's only so much you could do. Even if you raise the rents from 500 to 1,200, if the building next door didn't sell for 300 grand and you bought it for 200 grand, you're kind of still stuck. If unless you hold it forever. So I saw that very quickly, and I'm glad Brian and I met, and yeah, we've been growing.
So tell me, how many deals have you all syndicated since partnering?
So we did one. We're under contract with another, as I mentioned.
Awesome.
Um,
And
yeah.
tell me about how you all have structured the partnership as far as, who does what.
Go ahead, Brian.
Yeah, so I'm more the field guy. So, we're building a management company alongside of a real estate company. So I'm building that side of the company, and we got a management software called it's called Buildium, which is a great management software, and it has everything under one roof. So you can do your leasing on there, you can do your accounting, maintenance, you can communicate with the tenants and your vendors, and you can have tasks on there. So it has everything under one roof, and that's been great for us. It's been better than not having the communication all in one place. And but it's just important to we wanted to be part of that property. We wanted to manage our own properties, because who's gonna love our properties as much as we love our properties, and grow our company as much as we want to grow our company. There are some great third-party management companies, but why not manage your own if you can? And we're doing that at this point, and it's been good so far.
Yeah, and real quick for your listeners, we're based out of New Jersey, and all the properties we own have been in New Jersey within a hour or so driving radius of us. So it's been easy to do that.
Nice. So, quickly on the property management side, why bring that in house and take the time to develop your own management company? I mean, I've heard both sides of the coin. Why we should, or why some people say, "Oh, we're not going to do that." But for you all, why did that make sense to spend the time and energy, building the property management company when you could hire a third party?
I would say because we started off small with 10 units, 15 units, 20 units, and to have someone manage a third party company manage those size properties, going to be a pretty big management fee, anywhere from 5 to 10%, which is a big chunk of your income off those properties. So at first with the smaller properties, we wanted to, we didn't want to, give a chunk of our money to a third party management company right off the bat like that. And, as eventually as we, when we grow and we start buying properties outside of New Jersey, outside of the hour radius that we like to keep our buildings inside of, then obviously we're going to have to go to a third-party management company. But, to get the experience of managing your own properties and knowing how to do it, and you're going to know what to look for when you actually go out and hire a third-party management company when you go outside of New Jersey or outside of that hour radius.
So what about, buying in New Jersey? I mean, that's some pretty high-priced markets up there. How are you all buying there and still making any money?
Yeah, so keeping your ear to the ground with the brokers, being able to source off-market opportunities, and also the areas where we like to invest in New Jersey are not. When you hear of New Jersey, people think of Hudson waterfront, sort of like Hoboken, Jersey City, right with access to Manhattan. So we kind of stay away from that because the prices have been extremely high over the past few years, and um, we're west of that, so people still live within an hour, driving or train distance to Manhattan, and you're able to find some good opportunities in the outer periphery. So, um, as long as you understand, and the important thing for us to and your listeners to look at is if there's any rent control, because I would say a quarter of New Jersey have rent control municipalities, and if you're going in there with a value add strategy, uh, you might be surprised when you start trying to do renovations and raising rents over time, and you're getting a lot of kickback from the tenants, and they start telling you, here's the rent control laws, it's 2% a year, and that completely throws off your numbers. So, to your listeners, please look into rent control ordinances, no matter where it is, even in North Carolina or Florida. Some municipalities have it. So, New Jersey, it's municipality by municipality. So, if you understand that, and you kind of stay away from the markets that have very strict rent control, some of them are tied to like CPI, which is sometimes 1.5%. You should be okay.
So are you all, and maybe you can elaborate a little more on this, or maybe I missed it, but the rent control piece, all right, you're okay with buying in areas that have rent control or not?
Yeah, I mean, we're okay with it as long as the numbers still make sense. Some municipalities are better than others. All the properties that we own aren't in any rent control areas whatsoever. But some of them are pretty favorable. Some of them allow, let's just, for example, 5% a year, which that's pretty good if you can get it. And then, if a unit comes up for turn, you can actually put that unit to market without any problem. Some of them are capped at 20% of the previous rent, etc. So being aware of those are very important, especially in a densely populated state like New Jersey.
Yeah, I would imagine that would change your business plan. If I know I've got rent control, because it's going to change obviously how much you can increase the rents or force the appreciation, and it's going to change maybe how much I plan to remodel a unit or something like that. Because if I can't raise the rents, up to market rate right away. But can you elaborate on that?
Yeah, that is our business plan too, is to force the appreciation. And it's obviously, you said, it's hard to do that if you're in a rent controlled area. At this time, we haven't bought anything in a rent controlled area because of that reason. Because our business model is, we like to buy undervalued properties, go in there and increase the NOI by putting some capital improvements into the property, and then increasing the rent to market, and then lowering the expenses. And touch on a little property, your first property in New Jersey, which is a very successful deal for us, and it was in Chester, New Jersey. We bought that property at a net operating income of $95,000, and the average rents were about $875. It was a 10-unit property. We bought it for $1,285,000, and put $20,000 of capital improvements into it, and then we ended up increasing the NOI to $157,000, and we're stabilized at 6 months. This is how low the rents were. Some guy owned it. He was a farmer, owned it for 20 years. He had the principal paid down on it, was collecting great cash flow on the property, and really didn't keep up with market rates. And it was a great town too, and very little vacancy in that town. So we knew, Anthony and I knew we could go in there, and we could force the appreciation pretty quickly with very little capital improvements. And we had 3 weeks vacancy and raised the rents from $875 on average to about 14 on average. And we just got it appraised last week for $2.2 million. So we almost doubled the value of the property in a year period. And now we're going to pull out the equity, and we're still going to own that building and cash flow pretty well in that building. And we're going to obviously take that money and put it into a new deal. So there's deals in Jersey. You got to find them. You got to know people. You got to have relationships with brokers. And I think that's one of the most important things, is just building those relationships, because the best deals are pocket deals. When you're looking at deals on LoopNet, those deals been looked over 150 times, 200 times. That's why they put them on LoopNet. Once in a while, you can find a great deal on there, but most likely you're not going to be able to. You got to have great relationships with brokers.
Was that deal through a broker?
That was through a broker, yes.
So even Anthony had mentioned like keeping your ear to the ground, with brokers and off market properties. Are there some techniques that you all have used to build that relationship with these brokers?
Yeah, I mean, meeting with the brokers in person is definitely key. Even if you're just starting out and you want to grab brokers a cup of coffee, 20-minute meeting at Starbucks, telling them what you're doing, it really helps because they're going to be able to understand what your plan is moving forward, and they're going to have properties that they would not show other people, and they'll start showing you the properties. For your listeners, a good strategy that's worked for us is Brian mentioned LoopNet. Even if it's a deal you're not interested in, and it's in a market that you're interested in, definitely reach out to the broker because that deal on LoopNet's not the only deal that he has. I can guarantee you that. So that's helped us too. Actually, we got a deal out of it one time. We just hit up the broker. He had a two-family house for listing, and I was just prospecting, and we were talking, and he's like, "Yeah, I actually got this 20-unit property that I own. Would you guys be interested in buying it? I'm looking to retire." And we were like, "Yeah," and we were already looking in the area anyway, so something that happens too. Uh, you know, Getting a list of the most prominent brokerage firms in your specific area, just reaching out and seeing what they have, because as Brian mentioned, they're not going to advertise their best deals. But the first deal did come through a broker that we were, communicating with over the past 2 months before we bought our first deal. So I believe Brian met with him before, and we kind of everybody hit it off. So he understood what we were looking for.
Nice.
And I think another good thing too that we did last week is we had a networking event in Morristown, New Jersey, and we had 150 people show up. Anywhere from brokers, leasing agents, these people that were interested in real estate. 150 people that we had there, and we were the sponsors of it, so our name was on it. Our business cards were out there, and just building those relationships and having our name on a thing like a big networking event with 150 different people that were interested in real estate. So Anthony set that up and did a great job, and that's another way to build relationships also. I think another thing too is when you build a relationship with a broker, do what you say you're going to do. If you say you're going to close this deal, close the deal. If you say you're going to, whatever you say you're going to do, you do it, and you build trust with that broker, and that broker will bring you back more deals. And if you close a deal fast and you aren't a pain in the butt, the next good deal he has, he's going to bring it to you because he knows you're going to close that deal, and he knows you're a good buyer.
Give me just a couple tips on how you marketed that event to have that many people show up.
So, I kind of have a little bit of an advantage because I worked in the business prior. So I had a lot of those contacts and relationships that I invited. I was a part of a networking group as well. But for your listeners, from what I've seen is Meetup is a very powerful platform. Eventbrite is a very powerful platform.
What was that one? Event what?
Eventbrite.
Okay.
BRITE. We got maybe 30 RSVPs just off of Eventbrite. On Meetup, we had 30 RSVPs. Through Brian and my network, we probably, like he said, we had maybe 80 or 90 between our network. So, leverage social media, leveraging that as well. You can definitely make a meetup happen. I've seen a lot, especially in New Jersey. There's a lot of multifamily meetups. You can even go to those events and start meeting people and inviting them to your events. You could definitely make it work.
So guys, a lot of people are scared of this potential recession, that may be coming, may or may not be coming. Most people I think say it is coming, but how are you all, preparing for that?
Anthony, I'll start off and you can add on to it, but I think we're buying right. We're buying B and C class properties. And in 2008, when the real estate market had the big crash there, B and C class properties were the least to lose value, less likely to lose value. And, that's because everyone needs a place to live. These A class properties with a lot of amenities that are very expensive, those places are the first places that people leave. And they have some place to live, so they go down to B and C class properties with less amenities, a little less expensive. And also buying right, buying with cash flow. I think that's very important for people to do is just buy with cash flow. If you're buying in the hopes of just natural appreciation with a low cap rate, you're in trouble. You're just you're playing roulette. You might hit big on one year, then the next year, if there's a recession, you're going to lose. So I think, yeah, buying right, buying with cash flow, buying B and C class properties, it's not recession proof, but it's better than buying in hopes of this natural appreciation rather than forced appreciation and increasing the rents and lowering your expenses.
What's a way that you all have recently improved your business that we could apply to ours?
Improved our business. So I would say, and I could give credit to Brian, setting up property management software. And also if you're syndicating to your listeners, there's software that incorporates, an investor relations portal. So streamlining the communication with one, platform was extremely important. We needed that because there'll be papers all over the place and you'll be very mismanaged. Um, so for your listeners, Buildium's a great software platform for not only property management, but also accounting and investor relations. So setting that up was definitely improving the business.
And what's been the hardest part of this syndication journey for you all?
Um, Probably just learning all the rules. For your listeners, there's a lot of different regulatory rules that you got to abide by, in order to issue, because you're really issuing a security at the end of the day. I don't need to get into deep on this podcast, but look into 506B and 506C. The rules change, so we're trying to keep in touch with that, and obviously, all our properties have been 506B. So what that means for your listeners is people who you had a pre-existing relationship with that are, generally sophisticated investors in the eyes of the SEC. Just been friends and family through our, mostly professional network right now. And for your listeners looking to syndicate their first deal, that's the way that, we would recommend. Just go to your friends and family for the first deal. You don't have to deal with 506C and paying for, so what's called a PPM out of pocket, and very expensive. And you know, if you what I like to say to newbies who try to get into business, if you don't think you can raise anywhere between 500,000 to $1 million for your first deal, I don't think you should be in this business. So just through your immediate network. So little piece of advice.
What's your best advice for caring for an investor so they want to return to the next deal?
Yeah, Brian.
I'd say caring for the investor.
Yeah, just so that the most important things that we need to know so investors want to return to the next deal.
Well, obviously, give them a good return on their investment. That's number one. If you give them a good return on your investment, they're going to come back and do the next deal with you. And it's building that trust and that relationship with the investor. A lot of these investors aren't into real estate. They don't know everything about it, but if they trust you and respect you, they will invest with you. And I've realized that. I know people that I know a lot of people through football, and a lot of the relationships I've built with big money donors through Rutgers. And I have some of those people investing in our deals right now, and they don't know much about real estate, but they're betting in me and they're betting in Anthony, and they trust us and they believe in us, and they believe that we can give them a great return on their investment. And we're in the process of doing that right now. And once we add value to this property syndicating, and we're refinancing year 2, and we give them 50% to 100% of their capital initial investment back, and then they're cash flowing after that, they're going to be happy. Once they get that that money back from their refi, they're going to put that capital into another business and just keep rolling it over from there. So do what you say you're going to do. Just like I said with the brokers, do what you say you're going to do. Build that relationship, build that trust factor with them. And if for your listeners, they don't have a great reputation in the community, build it up. Meet with people. Go out to these investor networking events, and build those relationships and build that trust with these future investors, and build up your reputation. And it takes a lifetime to build a reputation. It takes 1 second to lose it. And I've seen that a lot with my teammates in the NFL and in football. There's a lot of great players, a lot of great people, a lot of great people, players that invest a lot of their time and their money into charitable events. But there's some that make one mistake at one time and it ruins their entire reputation that they built up over a lifetime. So just be smart and, build those relationships.
What's the number one thing that's contributed to your success?
Yeah, I mean, go ahead, Brian.
Okay. No, you go and I'll add on.
All right. No, I was just going to say, as Brian said, reputation is key. For me, for an example, just coming from the industry already in a different capacity, in a different asset class, but, definitely just building those relationships and a little bit for your listeners, even if you don't have a deal, on the table. And there's also regulatory rules behind that too, which, I don't want to get into, but even if you don't have a property that you want to offer other people to invest in, just tell them what you're doing. And over time, once you do have a property and you do have a deal, you'll be able to go to them and say, here's the opportunity, here's a structure, here's what the returns are looking like, here's the business plan. It's a lot easier of a transition, whereas you have a deal and you don't have any network. It's definitely, setting those up early contributes to success.
And how do you like to give back?
So I've been giving back for a long time now. I partnered with a charity called Embrace Kids. It's based out of New Brunswick, New Jersey, and it helps families that kids are suffering from blood disorders and cancer. And I've been involved with that. I have a charity event every year. It's called Rally at the Alley, where we raise money for these kids. And I have a bunch of players there. Anthony came last year. And all the guys from Mohammed Sanu, the McCourty twins. They all play on the Patriots right now. Michael Burton, he's a fullback for the Redskins. And we just get together and, people come out and bowl and love being around us and raise money. And I think it's important. It's one of the things that when I first got in the NFL, when I first got some money in my pocket, the first thing I want to do was give back. I've been given so much in my life. I've been given great opportunities. And I think, with those opportunities I had and the platform I had, NFL, it's so important to give back. And I'm going to keep continuing that, as I get better with real estate and syndicating and, as we bringing capital in, a lot of that money is going to go to charitable charities.
Awesome. Well, thank you guys so much. It's been a great interview of learning about, how you all have gotten into this business and even, some dynamics about your partnership and even this networking event that you all hosted and how that helped, further the relationships with brokers and how other ways that you all have done that and the amazing deal and how you all almost doubled the value of that property in just a year or so. That's incredible. Congratulations to you for that.
Thank you.
And, and just the importance of buying right and buying for cash flow. But tell the listeners how they can get in touch with you and learn more about what you all have going on.
Yeah, you can go to our website, Red Knight Properties, and that's Red Knight with a K, redknightproperties.com. We have a contact us form. You can reach Brian or I, or send either of us an email. It's our first initial. So for me, it's last name Scandariato at redknightproperties.com. Same thing goes for Brian, b.leonard at redknightproperties.com. We just set up a Facebook too, so make sure you like us there. In the process of doing more social media because we haven't really done much in the past. So yeah.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.